Current trading data, as of the market close for the weekend of November 29, 2025, positions Strive Inc. at exactly 1.12 USD, reflecting a minor intraday downward adjustment of 0.0050 cents, or approximately 0.44%. While the markets are currently paused for the weekend, this closing figure of 1.12 USD sets the psychological baseline for what promises to be a highly volatile opening next week. Most investors looking at a stock trading just above the $1 mark immediately categorize it as a speculative penny stock, likely a company struggling to keep the lights on or drowning in dilution. That is the expectation, that this is just another ticker in the graveyard of small-cap volatility, destined to drift into obscurity or suffer a reverse split just to stay listed. But the reality of Strive Inc., particularly following its recent aggressive restructuring and merger activities, is fundamentally different and far more intricate than the price tag suggests. The reality is that this is not merely a struggling small cap. It is a deliberate, high-stakes architectural shift attempting to replicate one of the most successful corporate treasury strategies of the last decade, backed by some of the most vocal and capital-rich figures in the modern financial landscape. When you see 1.12 USD, you are not looking at a business failing to sell a product. You are looking at a company that has essentially turned itself into a publicly traded vehicle for Bitcoin accumulation and anti-ESG governance, mirroring the early days of strategies employed by major players who utilized equity financing to acquire digital hard assets. The tension here lies in the disconnect between the chart, which looks like a standard penny stock consolidation, and the balance sheet strategy, which resembles a leveraged hedge fund. The volume we have seen recently, often spiking into the tens of millions of shares daily, indicates that institutional eyes and high-frequency algorithms are fighting for position, far beyond what you would expect for a typical company of this size. If you were sitting there holding Tesla stock or Apple stock, you were used to price movements driven by product launches, iPhone sales, or vehicle delivery numbers. With Strive, the drivers are macroeconomic policies, cryptocurrency spot prices, and the sheer force of personality from its leadership and major backers, including Vivek Ramaswamy. This is a stock that moves less on earnings per share in the traditional sense and more on the sentiment regarding the future of the US dollar and corporate governance. The recent dip of 0.44% to 1.12 USD is effectively noise in a much larger signal, representing a cooling-off period after the volatility introduced by their recent preferred stock offerings and aggressive acquisition news. It creates a fascinating entry point discussion for those who believe the market has not yet priced in the full transition from asset entities, the legacy digital marketing business, to Strive Inc., the Bitcoin treasury and asset management powerhouse. When we look at the immediate price action, that 1.12 level is acting as a critical pivot. Technically, the stock has been respecting support near the $1 mark, a psychological barrier that often separates tradable assets from liquidation targets. The consolidation we are seeing now, where the price chops sideways with low volatility, like the 0.44% move we saw today, often precedes a breakout or a breakdown. In this case, the market is waiting for the next catalyst, likely a disclosure regarding further Bitcoin purchases or a regulatory filing clearing the way for more capital raising. It is a waiting game. For the average retail trader using the Robinhood app or engaging in Robinhood stock trading, this lack of movement can be frustrating, leading to boredom selling. However, for the astute observer, this compression usually signifies that inventory is being transferred from weak hands to strong hands, from impatient retail traders to institutions or insiders who are playing a multi-year cycle. This is where the Fidelity trading platform users and those involved in Fidelity wealth management usually take a step back and analyze the broader thesis. They know that low volatility in a stock with this kind of narrative is often the calm before the storm. Let's talk about the business itself, because the confusion about what Strive Inc. actually does is the main reason the stock is trading at 1.12 USD and not higher. For a long time, the ticker ASST was associated with Asset Entities, a company focused on digital community management, Discord servers, and TikTok engagement. It was a niche tech play. However, the merger with Strive Enterprises changed the genetic makeup of the company entirely. Now, the core mission is to prioritize shareholder value above all else, specifically by rejecting the stakeholder capitalism model that prioritizes environmental, social, and governance goals over profits. But they didn't just stop at corporate governance. They adopted a Treasury strategy that involves holding Bitcoin on the balance sheet. This is the MicroStrategy model that investors talk about. By raising capital through equity or debt offerings and using that cash to buy Bitcoin, the company aims to increase the net asset value per share over time, assuming Bitcoin appreciates. This turns the stock into a proxy for Bitcoin, but with the added layer of an operating business and a highly vocal management team. It is a high beta play. If you are into self-investing or using investing sites to find asymmetric risk, this is exactly the kind of setup that looks terrifying on paper, but offers the mathematical possibility of outsized returns if the underlying thesis that fiat currency debasement continues holds true. It is interesting to compare this to how people approach Schwab Intelligent Portfolios or other robo-advisory services. Those algorithms are designed to minimize volatility and track broad indexes. They would likely categorize Strive Inc. as too risky or speculative and exclude it from a standard balanced portfolio. And they wouldn't be wrong in terms of traditional risk metrics. A stock trading at 1.12 USD with a massive pivot in its business model is the definition of uncertainty. But investment help isn't just about risk avoidance, it's about risk management. For an individual brokerage account, allocating a small percentage to a high-conviction thematic play is a valid strategy. The argument for Strive is that it is not just a company, it is a movement. It is betting on a shift in the American corporate consciousness away from ESG and toward profit maximization, utilizing Bitcoin as the ultimate store of value to protect those profits. If you believe that the political and financial winds are shifting in that direction, then the current price of 1.12 USD looks less like a penny stock valuation and more like an option premium on a political regime change in finance. We also have to discuss the mechanism of how this stock trades. Because it is priced near $1, it attracts a specific type of volume. You have the Robinhood crypto crowd who understands the Bitcoin Treasury aspect and treats the stock as a leveraged Bitcoin ETF. Then you have the interactive brokers trading professionals who are likely shorting the spikes, betting that the company will dilute shareholders to raise more cash for Bitcoin. This creates a tug of war. The company recently executed a preferred stock offering, raising capital to buy more Bitcoin. This dilutes the equity in the short term, which explains some of the selling pressure that keeps us at 1.12 USD. But the theory is that the asset purchased, Bitcoin, will appreciate faster than the dilution hurts the stock. It is a race against time and market sentiment. Unlike NVIDIA stock, which grows by selling physical chips and software, Strive grows by financial engineering and asset appreciation. It's closer to a closed-end fund or a holding company than a traditional tech stock. This makes it difficult to analyze using standard price-to-earnings ratios, which often look nonsensical for companies in this transition phase. You have to look at price to book, and more importantly, the premium to NAV of their holdings. I want you to pause for a second and think about your own portfolio. Comment below how many shares of Strive Inc. you currently hold, or if you are waiting for a specific price point to enter. Are you watching that 1.00 level as support, or are you waiting for a breakout above 1.25? The psychology of trading these levels is fascinating because everyone is looking at the same numbers. The institutional landscape for Strive is also evolving. Initially, major firms like Fidelity Investments or Fidelity Mutual Funds might be hesitant to take large positions in a small-cap company undergoing such a radical pivot. However, as the market cap stabilizes and the Bitcoin strategy becomes clearer, we might see passive flows start to enter. If Strive gets added to small cap indexes or specialized crypto equity ETFs, that creates forced buying pressure that has nothing to do with the day-to-day news cycle. This is the index inclusion catalyst that many SoFi investing and SoFi active investing users look for. It is the moment a stock graduates from being a trader's toy to an investor's holding. Right now, at 1.12 USD, it is still in the trader's toy phase, but the ambitions of the management team are clearly set on the latter. They are not doing this to stay a penny stock. They are doing this to build a financial empire that rivals the legacy asset managers they criticize. Furthermore, the anti-woke or post-ESG branding is a powerful differentiator.